I'll get your comments as well on the property market in just a little bit, but let's pivot again back to the yuan. It looks like the PBOC is sort of tapping the brakes a little bit on the pace of acceleration towards 7. Why would they be doing that when there's been a growing chorus of economists, significant economists, including the chief strategist at CIIC, saying now is a good time? It'll stimulate a little bit of domestic consumption, give more buying power for imports. What's your case?
Well, I think if you look at the real effective exchange rate of the Chinese yuan, it's probably one of the most underappreciated currency in the world, in the sense that in the last couple of years, the real effective exchange rate has depreciated by more than 25%. So depending on which way you look at it, so I think it could be one of the strategic moves by the Chinese government, trying to grab market share on the high-end manufacturing sector. But I think now we get to a point where the Chinese manufacturing sector is producing 13 to 15% of the total value add of the global manufacturing industry, and also the competitive advantage of many of the Chinese industries probably doesn't have to depend on the cheap currency, the cheaper way the other countries' advantage. So I think as a result, this is a good time to appreciate the yuan, and with and reappreciation of the Chinese yuan, there should be a revaluation of the Chinese asset price.
Sorry, but how much stronger does it get into next year?
Well past 7.
Oh,
yeah, it should.
What level then?
Yeah, well, if you look at back in 2018, right? So when there was the first trade war, the Chinese yuan at the start of the trade war was at 690-ish, below 690. Right, so we should go back to that level.
And then you said reappreciation of asset prices. Which assets are you looking at in particular?
Yeah, I think in general the Chinese stocks tend to be a good play. When the Chinese yuan appreciate, there's a close relationship, with a stronger Chinese yuan and a stronger Hong Kong market and the Asian market, in particular the Hong Kong market. I think also, because China is still a large importer of global commodities, and that will all go well for commodity price as well.
We're going to get to Tristan in just a minute to talk about the property market. But again, the overarching rhetorical question is where is and when are we going to see the bottom to the market? It doesn't look like we're going to see it given, the troubles at New World, the Country Garden, Vanke, and others.
Yeah, I think, in particular, Vanke has been in a bit of trouble, right? So they're probably going to delay the payment. But if you look at what happened in the past couple of years, so on one hand, the Chinese property market continued to decline, but then at the same time, the Chinese economic growth maintained sort of steady as she goes, right, for the past couple of years. So what that means is that, the Chinese economy has been undergoing a transition in the last couple of years, from an overly dependent, property dependent model into a new sort of high-tech manufacturing driven model. And it is showing result, otherwise how could you explain, on one hand, the property related data is so ugly, but then at the same time, the economy seems to be doing fine.
Yeah, questions actually over the withholding of certain property data as well. And
That's right. Yeah, that doesn't help confidence.
Probably not.
Yeah, but I think the investors can still pay to get access to it. Yeah.
Morgan Stanley, I'm curious then for your view, if you're saying that, just in general, that appetite for property. He had a roundtable conversation this week over in mainland China, and Robin Xing, that is the bank's chief China economist, but talking about this need maybe for mortgage aid and for China actually to turn to mortgage subsidies to try and prop up the market. I mean, is that a good policy move? Would you recommend a policy move like that? Yeah,
I think it would be a good policy move. I think they should just cut mortgage rate to 0. So people don't have to pay for interest payment, then they just live in the house for free for a few years, wait until the market bounce back. I think that way, on one hand you lessen the burden of people's repayment of mortgage, and then on the other hand you free up all this money to do other things. And I think everybody knows that by the time when it gets to 2020, 2021, the property price has peaked, and I think we're now 30% down from the peak. I still think that there will be further correction to go, but during this correction, how do you minimize? How do you sort of lessen the pain for people who bought at the peak? You free up the mortgage payment for those people, and then let them free up the money to do other things.
I saw a statistic. I can't recall the number right now, but the number of households in China right now that are in negative equity, it's just hard hard to climb out from. We've seen that in Hong Kong in the down cycle as well. It's vicious as well. So it's a very difficult one to get out of. But I also, sort of adjacent story is the input cost for the property market. Can you guys bring back up the copper prices that are now the futures, the SFE on the copper? The numbers stood out to me because we did see the global rally in copper overnight to record levels, but up again another 2%. So we are seeing in China, the Shanghai futures. Well. So you're seeing, that's an input cost to property as well, isn't it?
Yes. Property tend to be very sort of resource intensive, right, and then capital intensive too. I think, despite much efforts, trying to rescue the sector, there's still a substantial overhang that is ongoing in the market. And also, many of these developers who are now in trouble, they still have, thousands of projects being built in the market. So I think, in the near term, it's difficult to see an immediate solution to the sector. But then I think over the long term, things would get drawn out, interest rate would be cut, debt would be restructured, and many of the commercial banks may have to shelter, the cost of restructuring.
You mentioned earlier about how Hong Kong stocks in particular can benefit from that yuan appreciation, and another factor, of course, is the Fed easing again that plays into the conversation. For your preference around A or H shares then for next year, what do you pick?
I think I will just buy them both. Well, look, this year the Hong Kong market rallied substantially, right? So there's the premium of A share to H share actually lessened this year to a historic low. So I think if history is a guide, then A share should do better than H share in the next year. But then at the same time, because A share is doing well, and also because we're going to see some earnings recovery, and also strong policy support for the economy because it's the first year of the 5-year plan, then Hong Kong, as a benchmark, shouldn't be doing too poorly either.
Mm-hmm. All right, so we're already into December, so I guess I can have you put on your prognostication cap. What's going to be the dominant theme that we're going to be talking about through 2026 when it comes to the China market? I mean, with Central Economic Work Conference is going to be meeting. We're going to have the NPC to set sort of, kind of reconfirm what they've already done behind closed doors, and that's the next 5-year plan. So what's going to be 2026 dominant theme other than geopolitics as they kind of constantly remanage?
Simmering in the background.
Yeah.
Well, I think, one of the dominant themes is that the technology development is going into a accelerated pace. So I think next year we're going to see a lot more stuff going on, breakthroughs in semiconductor sector, AI, large language model and all that, and robotic movements, for example. And then at the same time, we're going to hear a lot more on Chinese consumption. Right? So there will be policies, trying to help Chinese consumers to consume more, spend their money, more social security reform, that kind of stuff. And then I think lastly, we're probably going to talk about more on, how best to resolve the property situation, because it's a situation that has been going on for years.
Because more consumption doesn't mean buying property.
No. Buying stocks, maybe.
Then, just on that tech story as well, what is the theme then that you watch in particular? Because I think that Chinese tech companies you've obviously got those e-commerce wars that are ongoing, affecting some of them. But the other story as well is around low monetization rates for the cloud companies like Alibaba on that side. Is it more the story that you watch with increasing adoption and driving better profit margins, for instance? What is the actual tech theme?
I think, many of the companies are still spending a lot of money, right? So, but if you look at the development of Alibaba, right? So recently it has made a lot of breakthrough in AI, and also, it's already the second largest cloud computing company in the world. Many people didn't know that. And so I think next year, just now you mentioned that China is going to stop using the H100, H200 chips, with the GPUs,
if they're allowed to buy them.
And the Chinese government is very determined to build its own chip. I think it's making some progress, not yet catching up the U.S. pace, but there are progresses that is being made in China. I think next year is going to accelerate, because there will be a lot more capex going into this sector, and that's why if you look at the semiconductor companies, they're doing exceedingly well this year.
Yeah, and I think one of the things that China has as well is really a finger in many parts of the semiconductor ecosystem as well. well from the designers, foundries, material suppliers.
That's right.
Yeah. All right, Hao Hong, thank you very much for joining us this morning. That was Hao Hong, their managing partner and CIO of Lotus Asset Management. And as we've been discussing these developments in the China